everybody, thank you so much for coming back to this channel. Today I have a special guest. His name is Gary Durand. He's a realtor out of South Maryland. He's licensed in DC, Maryland, Virginia, but he really focuses on the South Maryland area. And so I wanted to bring him on here as another perspective on current market situation, current market dynamics, especially with a couple of days ago. Today is September 28th, 2022. And a couple of days ago, we had the highest interest rate in the last 20 years, as well as, the housing sales are starting to slow down and the prices are starting to come down. Seller credit are back. So just a lot of things that I wanted to discuss with Gary in terms of what is he seeing with home buyers as well as home sellers, people that are trying to sell their homes as well as people that are on the fence. So first off, I just wanted to thank Gary for coming on the show and then ask him, I know you're a former cop. So how did you go from being a cop trying to arrest and give tickets to now helping people find their dream home? So how did that start?
So just, a little bit about me. I've been an active real estate agent since 2004. Like you said, I'm a former police officer. I'm a veteran. So why I got into the real estate game to begin with was really to help out police officers and my coworkers, because it was hard for them in the home buying area with availability. Like they may work midnights and be able to only see houses in the morning, or evenings, or their schedules or weekends they didn't have off. So I thought I was able to provide something where I could say, hey, I work the same schedules. When you can go, I can go. And that's what kind of got me into it. And then it was an excellent second career, or I never like the term, oh, you're a part-time agent. I was much time as it took to get the job done agent. If we could do it part-time, then it's done.
Yeah.
If we needed to do more, then we did. So that's kind of how I got into it. Was originally, I'm going to say there was some self benefits to it too. You know what I mean? It was real estate was a good side job, and it definitely helped, especially when I had young kids at the time and we weren't making a heck of a lot of money. So, but it really, and still today, my audience, I should say, or my demographic that I kind of go to is mostly police and military. I mean, that just, not by design, but that's just how it ends up,
So do you specifically focus on military vets and public service folks, or are you kind of like diverse to just everybody? But what's kind of like your niche market that you really connect with?
I'm diverse to anybody and everybody. If you want to buy a home or sell a home, I'm a real estate professional. I provide the service for everybody, regardless. Who do I seem to kind of relate a little bit better with, or where is my sphere of influence more prevalent? That would be in the law enforcement, first responder, military community.
So what do you advise for public, or I guess let's ask a different question, is what is the most common struggle that you notice on public servicers? What's the correct term?
Well, we could say first responders or people.
Oh yeah, first responders. Yeah.
Their time constraints are different than a lot of other people because they do work varying hours. They may not be able to go see a house until 7 o'clock on a Tuesday. So you have to be very flexible to deal with them, and you have to understand the way things work for them. And again, I'm sure this is for everybody, but more specific to military and law enforcement people and medics and firefighters I've dealt with, you have to have a plan and there has to be some organization when you deal with them. So if you're going to go out and show houses, they may have a 2-hour window and that's that. So you need to know your market. So if somebody wants to buy, my office is in Annapolis, Maryland. If you want to buy surrounding Annapolis, well, I need to know what's on the market, and I better know before I talk to you. And going back to the analytical thinking, there's a lot of research now that goes in, not just if people in that law enforcement or military community, but the population as a whole. Buyers and sellers are more informed in real estate than they've ever been in history. If you go want to show some houses in Annapolis, you can bet that they've already seen everything online about that house.
Right.
So they've kind of formed a pre-opinion.
Yeah.
So a lot of times, I'm not a big fan of well, just go online and send me what houses you want to see, and I'll take you to see them. When I hear that,
But that's what most buyers think, right? They think like you're just going to give them a list of homes.
well, a lot of times, and not disparaging any other agent, but you'll have real estate agents that'll just say, well, go on Zillow or whatever and find me the homes you want to see, and then send me the list, and I'll set up the appointments. I'll take
Yeah, I hear those things, and it's just
And my question after that is, how hard are you working for your real estate agent today?
yeah.
You know? So what I'll usually do is I'll say, hey, look, send me a couple things offline that you see. So if you see a couple houses on Zillow that you like, even if they're under contract or sold, pending or whatever, and then I can gauge what you're looking for off of that. And then when we get out there in the car, or we're not wasting time. We're not taking you to houses that you're not interested in. If I know you qualified for $400,000, it doesn't make sense for me to show you $800,000 houses. So, with military people, police, and probably most of the population, you have to have a plan. You got to have a plan before you go out. And you should meet before you go out. Your first meeting shouldn't be, hey, we're going out to look at houses. People should get to meet you. They should know you. I may not be a good fit for you, and you may not be a good fit for me. And I hope this doesn't sound arrogant, but there's times in my career I've had to fire a client and just be like, hey, I'm not your guy. And that's nothing against them or me, but this just isn't a good fit. And
Yeah.
I think it's important that the person that you're going to help facilitate your biggest investment needs to be somebody you feel comfortable with and can have a frank conversation with. And if you don't have that level of comfort, and I say trust, I consider, there's always the term, take care of them like their family. Well, I take care of all you guys like your family, because I have to eat next year. You know what I mean?
Yeah.
And I don't want to be your realtor for this transaction. I want to be your guy, like whenever you buy or sell a house, or your mom buys and sells a house, or your brother, sister, whoever. I want to be the person that you can say, hey, I trust this guy. There's no question. I trust him.
Yeah, I mean, I think that's one of the biggest things that is lost, I think, in general in the real estate industry, right? Real estate and lending, I kind of put them together. So the housing industry is, I feel like predominantly a lot of folks that enter into the space as a profession, they take it too much as a very transactional profession, where it's just that loan, or that, helping that person buy a home, or selling their house. That's all they focus on. And they don't really focus on building that relationship and trust, which will garner future businesses as well. And, it's thinking outside of just, what can I do to sell this house quickly, which I think is a priority if you're a seller and, you want a realtor to be able to do that. But it's also really understanding what are the needs for that client, from on the sell side or on the buy side. So I completely agree with you, because all too often, I think because clients have that former experience, they come to us, right, with a little bit of a bias on, we might be operating in the same position of being very transactional, and then they find out that we're not, and I guess their idea of our profession becomes a little bit, I guess, put on the edge or put on the side a little bit because of the fact that we're not operating in that sense. They're like, hey, are you guys real? Or do you really care about me? And then we're like, yeah, we do. I mean, you're making one of the biggest financial decisions of your life, and we want to make sure that you're taken care of. And I know you do that same approach. And that's why we enjoy working and partnering with you, is because you put your heart into every client that you work with.
And Chris, I have to say, you guys, you, David, I mean, everybody on your team over there, we've worked together for a lot of years. And I can tell you, the people that I deal with in law enforcement, you guys have helped many police officers out, and you're well respected and have a good name. And there is the follow up, and there is, I always use an example of recently where somebody was doing a refinance with it was a veteran, and he called me up and he said, "Can you take a look at this?" And I was like, "This doesn't seem right," and it seemed like he was paying an inordinate amount of money to close it. And I said, "Hey, why don't you call David, have him take a look?" And, I'm sure you've mentioned David, or he's been on here, and that's one of your partners that you work with. And you guys were able to sit down. I'm pretty sure it went to you, and you saved them like not a couple $100. You saved them thousands of dollars by just looking at it. And that goes back to the trust that I'm talking about. And that's where, I definitely, there's another thing in real estate where it's like, oh, I can't call the lender because the lender's not working today. It's a Saturday. Well, I can call you guys on Saturday.
Yeah.
If you're a partner in the real estate business and we're in this together, it doesn't do you good not to be here on weekends. And I have to say, there's never been a call that's gone unanswered. If I've called and said, "Hey, I need something," no matter when it's been.
That is one thing I found so surprising when I hear it, because I'm relatively new to the industry, as you know. And when I entered into it, to find out that, because for me, it just made sense, right? My working hours are the hours where the client is available. And it's not when the hours when the client is working. If I'm working when the client's working, that means we're going to miss each other when they need to speak to me about their financial situation or connect with the realtor. And so it just surprises me that that's so common in this industry when that's not what it is. We work when the client becomes available, which are typically in the morning. And then right around 4 o'clock, when some of the clients get off work to pick up kids, or they get off early, all the way up to about dinner, maybe past dinner time. I have plenty of conversations when, I'm talking to clients at 9 o'clock. I share with them, like, I got to put my kids to bed, and then I'll give you a call back and we can talk about certain things. And that goes well with, weekends as well. And the one thing I appreciate about working with your clients and the other clients is that when I'm transparent and I show that I'm sharing my time with them, they also are so respectful when I say, "Hey, I can't talk to you at certain times because either I'm cooking dinner," right? Because it's the time they're available, or I'm at church on a Sunday or something. Like they're very accommodating, understanding as well. And I think it's just, I think it goes back to the idea of what you said about treating them like family, like putting our heart and our life in there, right? Putting the people first before the financial transaction and the home. And that goes back to just understanding where are they in their life. To your point, helping a lot of the, former and current police officers and first responders that you are helping as well, is that I noticed, like, they're not available right at certain times. Like a travel nurse going to be available probably at like 10 or 11, and I got to just make time to make sure, like, okay, get them up to speed. Do they feel comfortable with all the financial strategies and decisions we're making? But it goes back to, like, a true professional in our industry is somebody that makes availability based on the client's availability. And it's not for everybody. And I think that's one of the you probably will agree, it's like the very first thing that a potential client, when they're interviewing, and I love that you said that, interview a few others to see, do you have chemistry and rapport? Because, to see, like, is that something important to you? Is your working schedule availability only at night? And then is that realtor or lender available at night as well? Don't you agree with that? Like that's probably one of the very first things you got to figure out as a buyer or a seller.
I agree 100%. you need to be available when the client is available. However, you do got to set some limitations. You know, you wouldn't call your dentist at 2:00 in the morning. Please don't call me at 2:00 in the morning. You know what I mean? Or you wouldn't call your lawyer at 2:00. Well, maybe, I don't know.
Yeah, maybe. I don't know.
But you're right, and that goes back to why I like dealing with the law enforcement community. Why I got into that while I was a police officer was because I think, you know, I had plenty of clients when I'm working 10 at night to 6 in the morning that were working 10 at night to 6 in the morning and would call me at 3:00 in the morning. Hey, do you think maybe we can go see this? Well, you're not bothering me because I'm up working with you. You know what I mean? Whether you called me or, you know, let you know a little secret, cops get coffee and donuts and we went to the 7-Eleven, you know, or something like that. You know, we can, those are the times I can meet with you. And a lot of times we can do face-to-face, which is, when I started, there wasn't Zoom. The internet was just coming out. And as much as all these advances are great, there are plenty of times I never even meet the agent on the other side of this transaction. And that used to never happen because if they got a contract, I had to deliver it to them. So that's the part of the technology that I don't like, because even having those relationships with other real estate professionals is great, because I can't even tell you how many times I was able to get somebody in the house because I just called around and said, hey, I got somebody that's looking for this. I got one. I got one I'm getting ready to put up. And then we could get somebody in before, you know, people that, you know, and you're going to come back to that time. Just listing your house and showing your house, man, it's a lot of work, you know. You got to pick your clothes up off the floor when you leave in the morning. You can't have dirty dishes in the sink. So a lot of people, if they can get it sold without having to go through all that, they'll jump on it. So that's where having relationships with lenders.
Let's focus a little bit on that topic. I like that you brought that up, because listing a home, you know, we just probably came out of, you know, originally in 2020 was the refi boom. And then end of 2020 going into 2021, and just recently was the seller boom, right? I mean, probably the craziest sellers market ever in recorded history. And now we're coming out of it. So a lot of folks during the seller boom, I mean, yeah, you had to still make your house presentable, but it was less of a concern because you just knew, like, low inventory, lower rates, so that people were able to buy homes and put offers over. But, you know, in the current market where now everything has slowed down a bit, right? Rates are higher. The buyer fatigue is there. The home prices are coming down, you know, seller concessions are coming back. So speaking about sellers, like, what advice do you give them now? Because I know it's still probably new for new sellers coming, because they have a little bit of that experience of knowledge of maybe their neighbor or their friend just sold a home for $10,000, $20,000, $50,000 over list price. What advice do you give to them now?
So basically this goes back to the being able to communicate. If I am an agent, and eventually it is your decision what you want to list your house for. I give you my advice and consent, and I'll tell you what I think it's worth. And if you don't agree with that number, I promise you there will be a real estate agent out there that'll say, oh, yeah, 100%. We'll list your house for $900,000, even though it's only worth $700,000.
Yeah.
Because their philosophy is eventually you'll come down to that $700,000, but you might end up getting $650,000 for it because it's been out there so long that you stigmatized the property and you lost your highest and best value because people look at Zillow.
They're using that tool you're already committed, so it's hard to go through the breakup.
You signed a 6-month listing agreement with me. You know what I mean? And you have a right to terminate a listing agreement for performance, but I would just say in your listing agreements, be careful. A lot of people put in there, if you sell your house within 6 months, you owe us a commission. So you need to, but we can get off into that in a different topic. So if you're putting your house on the market now, there has to be a realization that the market has changed. You're not going to put your house up and have a line of people waiting at the open house. And I'm not going to put in the multiple list service. All offers due by Monday, because, and then have 10 offers or 15 offers. That's not happening.
What are you seeing now? Because I know it was like 10, 15, 20 offers and, people around the block. And this was just not even that long ago. I mean, what are you seeing now?
What am I seeing?
Yeah.
10, 15, 20 offers as now translated in 10, 15, 20 days to sell your house. You know what I mean? Traditionally, it would take 1 to 3 months to sell your house. I think you're starting to see things stay on the market longer. If you're not priced appropriately, you are seeing price adjustments. And listen, man, for sellers, that's hard to swallow because you have an emotional attachment to your home. You have a value in your mind on what it should be and where it should be. And it isn't like, 5 years ago they were getting this. I mean, 4 months ago. You know what I mean? Yeah. It's like people were writing offers for ridiculous amounts of money. So if I was putting my house on the market, what first thing I would do is I would know my competition. I would sit down with the real estate and part of any listing presentation, your agent should tell you what they offer, tell you what they do, show you what's out there, let you see what else is out. Like, how many different houses in your neighborhood are for sale. And
I love that you bring that up. You just said about a minute ago about competition. I don't think sellers think of it that way. I don't think they think that there's competition on trying to sell their house versus somebody else.
There is now, and there had been in the past. Look, you said buyer fatigue, and over the past couple of years, man, it's been heartbreaking working with some people, man, because you just see them putting their all into a house, and they want to get a house, and they get shut out because they can't compete cash wise with some of the offers that were coming in. So you have to now, the people that are looking to buy a home for whatever reasons, and we'll get to buyers here in a few minutes, but you now there's 10 houses in your neighborhood. There might be 2 buyers, 3 buyers for those houses. Now, statistically, if you look, there's still a housing shortage in this country. Mm-hmm. There's still not enough houses to meet the demand of people that want to buy houses.
And that's why you don't see a bigger price drop, right? Because there's an inventory shortage.
And a lot of people right now are like, wait and see. This week with rates was a shock. I've talked to other real estate agents, I talked to buyers, talked to lenders, and everybody was kind of blown out of their chair. They expected it to go up a little bit. They didn't expect it to jump like it did.
Yeah.
I think that jump was reactionary.
Yeah, it was. Yeah.
But so you have to shine. So the days of just hanging a sign in your yard, all these rock star agents that are, I sell this and that. Well, now you're gonna have to work to sell it. Now you're actually gonna have to. You can't snap 12 cell phone pictures and make that your internet presence. So you're gonna have to take pictures. You're gonna professionally. Yeah. You're gonna have to do some staging. But then you have to cost versus return on that. You know what I mean? So you want your house to show well. Pricing is the one thing that makes or breaks a house sale, and how quick it goes is pricing. If you price it to sell, it'll go. But there are other things too. So the other thing that's coming back, well, 2 things are really coming back. You can expect now, as a seller, to pay the buyer some closing help, and that had gone away.
Really? How recent was that?
I think I started seeing it more end of May, June, July.
Oh, really?
Yeah,
that far back.
Where people, well, it's not really that. It's 2 or 3 months. You know what I mean? So I can tell you, my last 2 transactions, listings, the sellers gave up 3%. This time last year, they would have never done that. So I would say in your expectation, I always say, look, there's a possibility they're going to ask, and then you have to determine whether you're going to do it or not.
Yeah.
So I don't want to jump all over the map here. So pricing and your bottom line is going to be a big factor. And I'm sorry, I don't believe you're going to get, unless you underlist your house by $100,000, I don't think you're going to get $100,000 over asking anymore. I don't think people are going to come in with boatloads of cash and just be like, oh, I'll just pay cash. And you're going to see your neighbor's house that sold in January for maybe $100,000 more than I'm telling you to sell yours for.
Yeah.
And you're going to not like that. And again, if this goes back to, I don't come to your house like I'm here to list your house. I'm here to interview to list your house. And I like to say, and there's a lot of little catchy cliches in real estate. I don't list houses, I sell houses. Well, I got to list your house before I can sell it. So I don't know okay, that's just naturally expected. If you list the house, you're going to sell it.
Yeah.
You don't get paid, I don't get paid. And somebody doesn't get a house unless we sell it, right?
Yeah.
So that, the second thing that is back is I can guarantee you a home inspection. They're going to want one.
Are you seeing? So are you seeing a lot of waiving in these inspections and contingencies?
I had
and stuff?
seen a lot of waiving in the past, and I mean I've argued this with other people in this profession, and I'm more than sure my buyer clients I've had have lost out, but I never have recommended somebody purchase a home without a home inspection. Never. If you wanted to do it, I would be vehemently against it. I will make you sign something that says, against my advice and consent and professional, whatever, you went ahead and declined it anyway. The only buyer client I had in the past couple of years that I was okay with him waiving an inspection was he was a contractor that was going to rehab the house. He's like, I already can see what's wrong with it. I know. Okay, he's got professional knowledge. All right, he knows more about it than me. The other thing when it comes to homes, like inspections and stuff, you're a real estate agent. You're not a home inspector or a contractor. Stay in your lane. Be a real estate agent. My professional advice is always get professional advice. So where I come back to that, I would have a pre-inspection on my home. There's plenty of home inspectors out there. They may not charge you as much as they would charge you if you hired them to do an inspection on a purchase, but a pre-inspection on your home, in the past, about 30% of real estate transactions fell apart after the home inspection. So you need to know what's wrong. One of the things I do for my clients, I provide up to 8 hours of handyman service, light carpentry. They're not going to do a new bathroom for you in 8 hours, but I cover that. Their labor, and as long as it's not outrageous material cost, I'll cover that too. So, and again, it could be just a couple easy fixes. Most people make a determination if they're going to purchase the home within 30 seconds of being in there.
Yeah.
So
yeah.
if they don't walk into your home and see that wow factor right away, you're going downhill from there. So you have to really bring your house up to standard. If your carpets are dirty, you may want to clean them. If it needs a paint it. If you have like cabinet doors
which
hanging
you kind of decide all during the listing presentation, right? You see their home, and then you're kind of like telling them, here's what you need to do. Going back to your original comment about you're competing.
There's a lot of finesse in how you have to do that.
Yeah.
Because if you go in and be like, man, that's broke, you got to fix that. What are you talking about that light? You know what I mean? You're dealing with somebody's home, and you can insult your way out of the transaction.
Yeah.
So I kind of do the, like, if I was you, I would do this. Or a good thing before we do the walkthrough on your home is to make you aware of what else is out there, what's active. Start scrolling through the pictures.
Mm-hmm.
Does your house look like that?
Mm-hmm.
Now, through the wonders of photography, I show people pictures of their house sometimes. They're like, damn, my house looks so good, I might stay. It's like, the common thing is, wow, it looked better in the pictures.
Yeah.
Okay. But you do have to put your best foot forward. Your home really has to shine. And again, that is a hard part of selling a house. Is
I mean, going back to the inspection part. So people after, like you said, people 30 seconds, they make a decision on their home based on the decisions that a seller made during the listing presentation on what they wanted to do to either improve, clean, upgrade. And then during the inspection process, they're probably trying to decide, like, is this safe to buy? Is there any things that's, mold issue or whatever, roofing
Right.
that they don't want to deal with replacing a $20,000 roof the moment they buy the house.
Yep.
So maybe they go through that. Are you seeing any appraisal waivers still, or financing contingency waivers as well? Or are those now all back and it's pretty much a balanced market now?
I as of recently, no, I have not seen any financing waiver or appraisal waivers. Now, back in the earlier part of this year, I had buyer clients where they wouldn't waive an appraisal, but they would set up a gap and say, like, okay, if your house, I'm offering you 600,000 for this house, and if it doesn't appraise, say it was listed for 560 and they offered 600,000. In 2 months from now, that'll sound really silly that anybody ever did that. I'm sorry, but so you have that $40,000 gap. They would say they would cover it with cash if they had the cash, and some buyers did. Some people were frugal, or they cashed out money in the market, or they had availability for cash to do it.
One thing I want to add to that about, appraisal gaps is, because I mean, we're not seeing it as much these days. It's more like I see a cap of, if it appraises lower, they're still going to cover the difference or half of it or whatever. But one thing that I'll point out is, for appraisal gap strategy, a lot of what I notice a lot of lenders don't do is they share with the buyer on, if there's an appraisal gap, and let's say they're not the minimum 3 to 5% down, maybe they're the 10 to 15, 20% down, and to have a conversation with the buyer about, what's the MI difference, right? If you go break into the less than 20% down, because I had a client, they eventually found a home that they love, but one of the first homes that they loved, they were guided incorrectly and said, hey, if you can't come up with the extra 20 to 40% or 20 to 40,000 or whatever it was, the extra 5%, you're going to lose the house. Can you do it? And they decided to walk away from that home because of how that was instructed. And I told the buyer, I said, hey, the MI was $17. Did you really want to walk away from that house for $17? And they were like, no. But that house got sold, And so one of the things that I encourage all buyers is to have a conversation with a good lender that's able to talk to you about appraisal gap strategies and, advise you on, if you bring less and you're not bringing in just the 3 to 5%, what's that MI, and is it worth walking away for, let's say, a mortgage insurance of $20, $30, $40, $50 if you have good credit. I mean, if you have bad credit, then that MI is going to jump into the hundreds. But I would encourage that. So shifting gears on the buyer side, because we've been talking a lot about the seller. On the buyers, like, what's the I mean, it looks like it's a little bit more of a pro for them in terms of negotiating. I know on the lending side, obviously rates are higher, so we're talking about for a $500,000 home, an extra $500, $600, $700 in loan amount and payment, when it was just a year ago versus now. So, but let's just talk about buyers in general. Like, what are you seeing? I'm seeing, like you said, seller credit now. Is there anything else that they feel like they're happy for? I'm seeing more VA loans, which is awesome, because I think that's one of the most fantastic products out there for folks that serve the country. And what surprised me is a lot of VAs don't even know what kind of benefit that is, like 0% down, 100% financing, all that stuff. So can you just share those two components? What's
Sure.
in it for the buyers right now, and then how about the military vets?
So when we get to the military part, I am a military relocation specialist. I do have that designation. So there's an old saying with all these cliches out there. A lot of times when there's crisis, there's opportunity. So if you watch the news, or you turn on the television, or you read an article, it's terrible for home buyers and the rates, like it's impossible. So you just talked about we can hit it on the head with the first part. This now you have a good chance of getting closing assistance. And let's say on that $500,000 house, you get 3% closing assistance. So now you have $15,000, right? So that's $15,000 you didn't have to come out of your pocket with to buy this house. So if you're saying, okay, you're between $500-700 a month, okay, at this higher rate. Well, that's 20 months, 19 to 22 months, whatever,
Yeah.
of covering that higher rate with that $15,000 you didn't have to put down.
Mm-hmm.
So you're basically, if you're asking for that 3% closing help, and if you've been thinking about buying a house for a little bit, you knew you needed your down payment, and so let's just say,
Well, if they didn't, they didn't speak with a lender to get pre-approved, right? So
right, so you need at least, if you're going to FHA, you need 3.5 down.
yeah.
Right. So you need 6.5%. So now let's say you have that extra 3%. Well, now you have the difference for almost 2 years.
Mm-hmm.
So I'm going to steal a term I heard the other day. You marry your house, right? You date your rate.
Mm-hmm.
So your house you're married to. That's it. The rate is just somebody you date. You know what I mean? And I'm sorry, but when you date, a lot of times, if a better deal comes around,
Yeah.
you take it. So in the next 2 years, will this settle down? I would bet yes.
Yeah.
You know what I mean? And I think everybody I've talked to thinks we're going to be high 4s, 5s by the time everything's said and done. So that's your difference right there.
You're exactly right, because I think a lot of folks, one thing that they misunderstand about mortgage rates is that they think it's directly tied to the Fed fund rate, which the Fed's hiked, just recently, but they also were quoted that they're going to hike it again by another 0.75% in November. And so a lot of folks are in fear that, mortgage rates are going to rise because the Fed fund rate's going to rise. And that's not the case. As I shared with you and many
Right.
others on the channel previously, is that the mortgage rates are tied to inflation. If the
Yes.
inflation is high, mortgage rates will be high. And we know right now inflation is not at an all-time high, but it is still there, right? I think it came down just a
We're
little
going
bit,
close.
but we have plenty of room to come down. And once that comes down, which typically comes down during the recession period, which if you hear the news, that's where it looks like we're headed for, then mortgage rates are going to come down too. Now, it's not going to be refi boom, folks. It's not going to be 2%, 2.75 again. But, a lot of experts think that it's going to be in the mid to high 5s or mid to high 4s, maybe low 5s. And that's going to save you about $200 to $300 on a $500,000 home. So that's something to consider. And Gary's exactly right. You have to date the rate because, if you're deciding and in a position to be able to buy a house at whatever the current rates are, you can eventually refinance out of it if the rates become favorable in a year or two. And then in addition to what Gary was sharing about, seller credit, you can use that to offset closing costs, which is going to be escrow, title, property taxes, and appraisal and so forth. But right now, a lot of lenders are also promoting what's called 2-1 buy downs or 1-0 buy downs. So 2-1 buy downs, what they are, the first year, the interest rate is 2% less than the current rate. The second year is 1% less. So let's say today's rate is 6%. That means your first year of payments is based on a 4%, second year is based on a 5%, and then the third year goes back up to the full 6%. And the good thing about that is that because we know that the recession is coming, you'll probably refinance out of that anyways before it hits that 6% mark. So that's something to share and talk with your realtor partners, or if you are a client or looking to seek someone in the South Maryland area or in the DMV, you know, with Gary, is about the 2-1 buy down. Because what's going to happen is that it can only be paid by the seller or by the realtor based out of their commission. So that's something that you can talk to Gary or your realtor partners about. So thanks for bringing that up, because yeah, I mean, folks need to understand, like, you know, what the current strategy in place is, because it's not the negotiating strategy right now, as you're sharing, is not what it was
No.
even 3, 4, 5 months ago, right? I mean, wow, that's not even that long ago. I mean, that was like right before summer vacation started for my kids, and now
Right.
new school year, new game plan for buyers. So it's really coming up to speed on what tools do you have to negotiate with, and what does the outlook look like? So I appreciate you bringing that up. Is there anything else that you want to kind of share with buyers?
We covered home inspections. I mean, listen, there are thousands, probably millions of buyers out here that bought a home, waived the home inspection, and then found out. So the area I would focus on, if you ever look at a map in Maryland, would be from Annapolis going south, right? So when you get in areas of Southern Maryland, there's not sewer, there's septic and well. You know what I mean? Well water and septic systems. Or so people were buying these houses because it's the only way they thought they were going to get in. And they, to waive an inspection, they turn around, man, and they have, you know, a new septic system is anywhere from $15,000 to $20,000 if your septic has to be replaced, if it can be replaced. There are people that have bought houses where they waived inspections, they end up with a septic issue, and then they can't get another one. Then they have to get something called a mound system or a tank that they have to get pumped every 3 months to the tune of $400 every 3 months. So there are things that the brakes have been hit a little bit, and with slowing down, taking some time to think about formulating an offer. It's not like we saw it Saturday. I got to, you know, I had one kid, we left the open house, went down, sat at a restaurant, wrote his offer and submitted it, and told them if they didn't take it tonight, we were withdrawing it. And they took it. Right? You know, those days are, hey, now we can pump the brakes a little bit. Let's make sure we get a good inspection. Let's get the things done that we need to do. If you were stretched to get into a house, and I don't care who you are, well, I can't say that because some people obviously are better financial situations than others. Most people, they're stretched. You know, they're breaking the bank to get into a house.
Yeah.
And to get in there and then have a safety issue, like a foundation or a septic or a big ticket item, that maybe could make your house unlivable. And so with the market being where inspections are back on the table, so that could potentially be the difference right there. You talked about VA. I have a lot of clients that use VA. My homes I've bought, for the most part, have all been VA. Basically a veteran's mortgage is it's an opportunity afforded to people that are veterans, honorably served. There's time limits on if you were in the National Guard or Reserves. If you've done a combat deployment, you're automatically eligible. And basically, the veteran can get in with no money down. And there's a funding fee with VA, which is based on how many times you've used it. If you have a disability, a combat-related disability, most cases that funding fee will be waived. You can roll that into the loan. So you basically are getting into the house for your closing cost, which now we're saying closing cost is back on the table. You could potentially get into the house with no money down.
Exactly. I mean,
And
that's like incredible, right? I mean, that
right,
VA is the only right now. I mean, USDA, there's some possibilities, but
well, I was going to
it's
hit that
very, yeah,
after VA, but
yeah. But
um,
with VA, I mean, my God, like this is the opportunity for a lot of VAs if they can, if they can get approved for the loan, as you said, like
right,
zero money out of pocket or very close to it to buy a new home.
absolutely. And one of the things during the boom, and I'm going to tell you, it's not legal, but people were doing it. Agents were kind of steering people away from VA because there was the mindset, oh, a VA inspection, you have to have an appraisal on a VA,
Yeah.
right? And it's a little more in depth than a like a conventional appraisal because they dig a little deeper. If there's chipping paint, they're going to tell you have to fix it. If you got more than 4 stairs anywhere, interior or exterior, you're going to have to put up a ramp. Not major stuff, but it's what they consider safety issues in a home.
Yeah.
You're going to have to comply with. And there was the thought amongst a lot of people, well, if they're going VA, they're not putting any money down. They don't have the money. They do have the money. If you had an opportunity not to put any money down,
It was very discriminatory. I'll just put it out there. It was, I mean, because I'm not on the real estate side, but I mean, I've heard like, yeah, they would say, oh, V8, nope, conventional
right.
cash. And that's how, and it was in a way I felt, I mean, you can say cash versus loan, and that
Right.
was discriminatory too. But I think in general, if you had a VA or an FHA loan, like it was pretty much you were on the bottom of the barrel. And I felt it was unjust because
When
the
I'm
loans
saying-
are solid. They had just as much opportunity to buy that home, but that's the unfortunate thing about on the sales side of real estate, right? Is it's people making decisions and no one's with a microscope easing into their phone or to their conversation saying like, oh, how are you making that decision?
And then we go back to the argument that I would make, and I'm glad I don't have to make it anymore, because this is a benefit they got for you,
Exactly.
and because somebody is buying a house, no money down, I might have $300,000 in the bank,
Yeah.
but when the interest rates were in the threes, why the hell
Well,
would I not
VAs
take
were in
that
the
money and go do something with that?
VAs were in the mid twos. I
Right.
mean, it was
At one point, they were
phenomenal.
275.
Yeah.
So why would I take cash where I can have it somewhere else making money for me,
Yeah.
and then put it down on a house when I can buy it for no money?
Exactly.
It
Exactly.
doesn't mean I'm broke.
It was
It
almost
just
free
means I'm
money.
taking
I mean,
advantage,
yeah.
taking advantage of a benefit that I earned.
Yeah.
And
That's why I'm
VA
so happy. Like I'm seeing more of it because they're being able to exercise the benefit that they truly earn through serving this country, and like,
Right.
and I mean, we have one client right now in Texas where he's literally buying the house with no money out of pocket. I mean, because he's able to roll in the funding fee, and to your point, he got seller credit and everything, and I think he's writing a cash check for $700. I mean, it's like ridiculous.
Now, one thing I do while it's on,
And ridiculous in an amazing way, right? It's like it's
Right.
a great story.
before this latest boom, just if you're a veteran and you're buying a home, and you may be asked to initially put down an earnest money deposit on the home, right? And that was always going credit towards whatever you had to put down or whatever. And I hope to see this again soon, where I've seen veterans go to the table and get a check for their earnest money deposit back from the title company because they didn't have to use the funds.
Exactly.
So I mean, that's if you work with me and you're a VA and you say, hey, but gee, you told me I get the house for no money down, for nothing. You still got to put something up to tell these people it's safe to take their house off the market.
Yeah. That
But
you have
as long as
the
not used,
interest in doing it.
Yeah, it's coming back to you. You know what I mean?
But
So
I mean, it goes back to
don't think
like
I lied to you.
VA is the real deal in terms of zero money down, zero cash out of pocket possibility.
Right.
I mean, at the end, it's like almost minimal cash out of pocket to buy a home, and that's just amazing.
And for you veterans out there, probably one of the greatest things about this program is you don't have to pay MI.
Yeah.
Yeah, and MI is hundreds of dollars a month in some cases.
Yeah.
Chris, you could cover that better than me.
Yeah, I mean, it's like it in a conventional high balance. So in Montgomery County, where I live, the loan amount now goes up to $1,073,000. So, 5% down, that's a little over what, $1,100,000, $1,200,000 ish. And so the mortgage insurance on that for a 5% down is a couple of $100s. Now
Right.
for jumbo VA, zero mortgage insurance. So, and which is incredible, right? Because that's, what is that, times 12? That's 24,000. Am I doing the math right? $2,400. I mean, that's thousands of dollars that you're saving because of your VA benefit. And I love that. It's incredible, the benefit, and typically you get a lower rate than conventional loans. I mean, there's just all these benefit that comes with it, and and the appraisal is not really that hard. I mean, I think realtors in general, I want to say the majority of the population don't understand it, or somebody that didn't understand as their mentor said something about it to somebody coming up in ranks in the real estate industry. And then that's all they took. They're like, oh, this person said that, so that's what it must be. And they didn't validate if it's true or not. Because that's what I've heard and seen so many times is they had false information about a VA loan. And so I'm just encouraged that I get to see more of the VA loans. I get really happy because I'm like, this is a slam dunk deal. It's pretty easy, for me. Like VAs are not that difficult.
No,
FHAs, they're more nuanced because it has to pass multitudes of inspections. But for VA, it's like another conventional loan for me. I mean, it's really not that much different, except maybe a couple more paperwork. That's like, so what?
Probably the most difficult thing the veteran has to do on that is get a VA certification.
Yeah.
That's probably the hardest thing that they have to do.
And if they don't know how to do it, I mean, a lender can help assist to, get one for them by signing up for it. So it's like, all you need is a DD-214. Boom.
That's it. And if you can't get that, if you don't have that, there are places you can send away to the military and they'll get it.
Yeah.
And you'd be surprised with the military. I was in the military in the 80s. When I retired from the police department, because I bought back my time towards retirement, I had to show them how much money I made in the military. I was like, how do I know? I was, the military knew. They sent me something that said, you made this much, and
they're responsive. That's one thing I love about it.
They really are.
I think one thing that I want to share with vets is the military is responsive. I mean, very responsive. It's because of the current technology system, you see all the paper trail online. So I see the communication between the vet and the department, whatever, defense department that they work for. And I see the going back and forth on their dialogue. So it's all tracked. They're responsive. Highly encourage any vet to explore that as your number one option.
So one last quick thing I want to cover on veterans mortgages and veterans in general. Many have disabilities, and not all your disabilities are combat related. I mean, if I was a paratrooper when I was in there, on a cold day I can feel it. You know what I mean? People experience hearing loss. People get injured. There's a lot of things that happen to people in the military. In a lot of states, and I can speak, I'm not 100% sure about the District of Columbia, but I can speak for Maryland and Virginia. If you have a 100% disability rate, you are exempt from paying property tax in that state. So that is another huge deal. Property taxes in some of these houses, $4,000 or $5,000 a year. So take that off your monthly payment too, if you have that high of a disability rating.
Yeah, so like full and total loss, absolutely. I mean, and for Maryland, you still have to pay the recording fee, which is a couple $1,000s. But for the property taxes on your escrow, if you're escrowing, don't have to pay that. And if there's any property tax dues on that home, if it's a resale property, you don't have to pay to keep it current because it's all covered. So Gary's absolutely right. That's one of the another benefits. And that, again, it goes back to speaking with the correct realtor, correct lender to see like what is your maximum benefit. And you won't know that unless that individual, that professional asks you the right questions to make sure like is everything covered so that you don't have to pay unnecessary costs. You know, like if you're disabled, then the VA funding fee, depending on if it's a first use or a subsequent use, it's 2.7 to 3.5% of the purchase price. I mean, that's a big amount, right?
Yep.
So
Absolutely.
just, make sure to contact and call, a professional like Gary or myself, and then we'll just walk you through it. Or, you can, if you don't know, what I love to do is I love to give people that we're not licensed in tips on how to shop for a lender. So I'm sure, Gary, you can do the same if you're not licensed in those states, sharing with
Absolutely.
them,
And
this is the things that you got to look for.
If you have any questions, and reach out.
In the show notes, I'll put Gary's information on the bottom so that you can email and contact him.
My company, Century 21, we have a vast network. I can find you a realtor anywhere, and I can vet them for you too. You know what I mean, to make sure. So we're getting a little long on this. I don't know, but I would just say this: if you're buying and you're alarmed about the rate, okay. I don't know if you looked at what you're paying in rent lately, but rents are going up. If you rent, your interest rate is 100%.
Mm-hmm.
That's the rate you're dealing with. So, that's my biggest thing for buying a house, 7%, 100%. I'd rather pay 7% and then start building some equity and have something for me in the future.
Another thing is I love what you sharing about that as we're finishing off is the housing boom. It looks like it's coming every about 10 years or so. It's seasonal. And so, for prospective buyers and prospective homeowners, do you want to miss out on the next housing boom? For me, that I remember in 2006 when there was the housing boom, I was like, man, I wish I was in a position or in the knowledge to be able to buy a house, because now I would have been able to sell it, make some profit, and then go into a newer home or a different home. And so for any folks that wants to take advantage of the next wave that's going to come probably in a decade, like, be in position. Don't be the renter, be the homeowner, so that you can take advantage of that, have equity built up, sell it, and then, maybe buy another house, and then use the rest as savings, or maybe you need it for college kids funds and you have to sell it, whatever your life situation is. But, don't lose out, right? Right now is the time, as the market's slowing down, to be in a position to speak with a realtor, speak with a lender to buy a home. So Gary, I just want to thank you so much for your time today. Just sharing your insights on how to benefit, how sellers can take advantage and I guess be in position emotionally to sell their house, because it's not 5 months ago. And then buyers, the pro tips on, what you should expect and prepare to negotiate when you're trying to look for a home. So Gary, thank you so much. Any last words?
Hey, you know what? Just to capitalize on what Chris just said, there's nobody that's been in a house for 30 years that lost money when they sold their house, or 20 years. You know what I mean? So your stock market's taking a nosedive. You consistently, your house, whether you might not see the equity you saw in the past 2 years, but you're going to see an increase in value as your decrease in principal, what you owe, goes down.
Yeah,
So
the trend is always this way, even if there's some little bumps going about as we go.
Yep. But hey, listen, reach out to me if you have any questions. Whether you live in Maryland, DC, Virginia, Texas, California, Florida. If you live in Florida right now, God, please protect you. And I hope Florida comes out on this okay. But we're here. We're available. Chris is a great partner, great lender. And look forward to hearing from y'all. Take care.
Thanks, Gary. See you, everybody.